Hey, welcome everyone. Pat Mitchell with TrickTrades here, and in this free video lesson, I'm going to show you what I want you to start watching coming into the next market week, as well as I want you to start implementing into your day trading on a day-to-day basis. If you do so, you'll find success a lot easier. So let's get into it. Okay, folks, so first, before we get into the charts, I just want to talk to you guys a little bit about support and resistance. Now, I know that is something that everyone's like, yeah, blah, blah, blah. Support, resistance. Yeah, Pat, I know. Well, a large part of the problem is a lot of people don't know how to watch support and they don't know how to watch resistance. They don't know how to take the trades when the trades are right dead set in front of their faces. So in this free video lesson, there's going to be no marketing. There's going to be no pumping trick trades. I just want to get straight down to the nitty gritty and the education, because that's why you guys are here. So pay attention. I'll try to make it not too long for you guys, and just really pay attention, take notes, watch it over and over again, because I do put in a little bit of subtleties into the video lessons that I think a lot of people overlook, and I really want you guys to succeed. So let's get into the charts now. Okay, so basically in this video lesson, I'm just going to go over Thursday's watch list, and I'm going to show you exactly what we were watching, how we were watching it, why we were watching it, and basically just go over the plays and show you guys what to start watching and why to start watching it. Okay, a lot of people leave out the why. I don't want to leave out the why. I really want you guys to really get this and get this information into you. So we'll go right into the charts now. So Intel, INTC. Now, we don't trade this very often, but when a trade comes up, I really like to watch it very closely because it trades very easily. There's a reason why we trade professional stocks, which are the higher price stocks, the market leading stocks. They trade very easily. They're very predictable. Anyone that says that stock trading or stock charts or any type of ticker isn't predictable, they don't have any skills, guys. Stop listening to them, because it's extremely predictable. We do this every day. So on Intel, I watched it on this gap update, and then we started watching on this secondary day, which was yesterday, Thursday. This was a very, very easy trade, and there's a couple little subtleties here that I really want to show you guys on exactly how to catch a move like this. So I'll get zoomed in. So most people, as I discussed in my mentoring live class last night, is a lot of people, as soon as the market opens, okay, on this candle here, this is where the market opens, they're instantly on edge. They instantly just they got their hands on the mouse. They're wanting to just jump in on this. Stop doing that. There's no need for it. Take the FOMO out of your trades, sit back and relax, and let these stocks come down to the price level that is interesting. When it's up here, there's nothing going on. Yeah, there's some pre-market highs, and I guess you could have grabbed the rejection, but there's no real rejection there. It just dumped out. It's also very volatile time of the trading day. Has the most volume. There's the most orders going in, going out. It can be really congested, and you don't want to take trades like that. Just take the easy trades. Now, this level right here was marked pre-market during the pre-market plan of attack. I went over it. I actually went over it in the Hyperscan video watch list as well. Do you see where it came down? So I have a level here at 58.12, okay? That's the level we were watching. That's a level that was being called out and was the trade plan. So I develop trade plans for all my members. I tell them what levels to watch, how to get in, where to take profits, the whole nines. Anyways, so on this here, where's the low of this candle? 58.12, to the penny, to the absolute penny. Now, this isn't some sort of cherry-pick trade. This is something that happens every day. And I'll go over the other tickers in the watch list here, and you guys will see. So how do you get in on this? All right? So it's like, yeah, Pat, okay, so it came down to the level. Now what do? Well, it's about the subtleties of trading, guys, okay? They're very subtle things you can start watching. Some people will watch the level 2 and the time in sales. Myself personally, it moves a little too fast for me. I do use time in sales, but I don't watch it like a hawk. Some people may laugh at that. I've never used it. I've been trading now for 7 years. I use it rarely. I use it for very key things, just to see support and resistance breaking, but that's literally it. You don't need to watch this stuff the way that a lot of these people make it seem. Don't complicate trading. Keep it very simple. So what do you watch here? Okay, so it comes down to this level, and then we have a slightly higher low. We got some bottom wicks here. It's also around another key level, which is this blue line. But now this green line here at 58.12, that's the area we're watching. So why did it bounce there? Well, these stocks are not penny stocks, folks. These stocks are traded by professionals with a lot of money, okay? They have a lot of skin in the game. So where are they going to place their trade? They are going to place their trades. They are going to put their hard-earned money in. Well, some of them it's hard-earned. Some of it's, mommy and daddy's money. Anyways, I'm just joking. But they will only risk off of very key levels. They're not going to risk their money at some nonsense half-ass setup, okay? They don't trade like that. They trade very mechanically and very methodically, and it's our job, because our accounts, no matter how big or how small they are, they're not going to be able to move the market. Not with these stocks. You got a big float here, 4.4 billion. That's another thing. Don't let float sway you on the tickers to watch. That's a big misconception. They all tell you not to watch these high float trades because they don't move. This on the option side was amazing, not to mention just the equity side was fine too. So you could have grabbed almost a point on a $60 stock of free money, because look at it. Look at this setup, guys. It came right down to that level, and lots of members were watching it. I didn't trade this one. I'll go over my trades later, but on this, that's what you look for. It comes down to that, and then it starts to it forms a real, and now it's quick, but there's a base there, okay? And it starts to base, and then as soon as it starts to bounce, hammer it, get in, mark it in. You don't need to you could have orders set if you wanted, it doesn't matter. The market orders, the limit orders, blah, blah, blah. Don't worry about that. Just mark it in. We are not trading penny stocks, folks. We're trading proper stocks that are in the range of $50 plus all the way up to $2,000 stocks. We're not worried about 10 or 15 cents on the trade. We're looking to make points on a trade. We're not worried about a couple of cents. So just mark it in. Just get in. Don't miss the trade over a couple of cents. That is a big problem a lot of people have. I constantly see people say that they've taken a trade, or they wanted to take the trade, they had an order set, and they didn't get a fill. They missed it by a couple of cents. Stop missing trades, guys. Just mark it the fuck in, okay? So on this here, and it worked. Instant resolution. It bounced off that level. So some of you may be looking at this, and you may be saying, well, why didn't you take it here? Well, there's nothing there. There's no reason to take the trade here at all. The level, daily levels, guys. And I pound that into my members, and it's something that it's a big light bulb moment. And I know some of you are saying, oh, it's just basic support and resistance, but it's how you watch that support and resistance. It's how you execute the trade. Anybody can make a call out. It's about executing the said trade, okay? So that was Intel. Now, how do you get out? Because it's not just about the entries, it's about the exits as well, right? So on something like this, I tell my members to pay yourself on that first push. You want to lock something in because you want to be able to take care of commissions and fees, and then whatever happens, happens. You let the market take you out. You set a stop based on technicals, and then you let the market take you out, okay? So you would pay yourself on this first push, let it pull back, that's fine. Some people would say to add. I'm not a big fan, especially of new and struggling traders adding, because it'll just breed emotion. It'll put too much emotion into that trade, because now your entry is up. With your average, it'd be somewhere in this area, right? Instead of having a really nice entry down here, which gives you tons of patience in the trade. So on this, the next level, you would want to pay yourself somewhere into that VWAP. VWAP is basically it's the best price. It's an institutional marker, originally developed by mutual fund traders for, it's basically getting the best price. They drive the stock up or down into this VWAP. That's a lesson for another time though. So you would pay yourself, and then once it starts to kind of roll over, and you can see it triple topping, right? It just doesn't have the nuts to go any higher. There's no more buyers up here. You definitely want to consider taking it off and then leaving either a couple contracts on or a couple shares on just to see what it does for you. I've hit some really big trades doing it that way, and it did. It ended up coming up even more. So from your rough entry up to highs is about 74 cents. Now, I know some of you are saying, well, that's not a big trade. Percentage-wise, it's not a big trade on the equity side, okay? But when you're trading options, the percentage gains on this, on something like this, if I had to take a rough stab at it without pulling up charts and finding out the exact percentage of the move, I would say from here to highs would be somewhere in the neighborhood of, I don't know, 20-30%. So you can make 20-30% trades each and every day. Don't listen to these guys that are telling you that you can hit these 20,000, 40,000, 100,000% moves. Guys, it's not going to happen. You're not going to hold through all that. So anyways, that was just Intel. Okay, so let's take a look at one of the trades I personally took. Now, I love this BABA trade, okay? So on this here, I just want to make sure that camera's not in the way. Yeah, we're all right here. Let's go to the daily chart, and I'll show you the levels. So the levels I marked out were highs and lows, and then I watched this day. Now, where it was opening up, I was expecting a dump, okay? It's about speed and distance and what it does out of the gate, which is very important. That's something that it's one of the key strategies at TrickTrades that I'll teach you. But watch for it to pull back right at the market open, let it dump out, let it sell off to the nearest level, okay, which happens to be support. So it needs to come down into support. So what did it do? It held that area very, very close. Now, you'll see, and I pointed this out, when they break $200 stocks, $150 stocks, when they break that support, it's generally only by about 20 or 30 cents. That is a rough average, and it happens all the time. It's market makers trying to stop you out. So let's get into the intraday chart here. I'll get zoomed back in. Sorry, guys. I know this video is a little bit long, but I really want to educate you guys. I really want to show you guys. So this was the trade I took. And I wish I had it loaded, but I don't. I have all the triangle for trade entries, and it shows, and I called this out. I said, I'm just dipping my toes. I'm going to start in. Now, the reason why I will dip my toes, what that means is I'll take a very small starter position. And what that does is focuses me. Now I'm focused. I have skin in the game, and I'm ready to roll, okay? Now I focus on this. Sometimes if you don't have skin in the game and you're just kind of watching it, you'll miss the trade because a lot of it is just, well, you're not focused. There's lots of things going on. There's other charts that can grab your attention. So how do you solidify the fact, like being in the trade? You do that by putting money in it. We have a huge emotional attachment to money, so that's going to focus us, okay? Excuse me. So once it opens up, it drives down, which is exactly what I was expecting to do. And I entered right in here first, okay? Now it's coming into that level. It's coming into that. I dip my toes. I called out, okay, small starter position in BABA, and I'll add on confirmation. So once it comes down, it breaks by that magic 30 cents, which it does all the time. These stocks are very predictable, folks. So it comes up. I take a couple off because it's right at, this was an options trade, by the way. So I take a couple off into the VWAP, which paid out, pretty nice. And then once it comes back down and it confirms with this higher low, you can watch previous video lessons here, free video lessons here on YouTube about higher lows. I've got a lot of them. Make sure to check those out. And once it confirms with this higher low, that's when I hammered it. That's when I attack. When I smell blood, I attack. And right there, that's where I grabbed it. You see the level here at 185.78? See how it traded in and around that level all day? It's about what happens next. When you see these levels break, that's fine. It's an emotional part of the morning. Like the morning has a lot of volume and a lot of emotion in it, all right? So it can break very easily. It's also market makers trying to scare you out. So what they do is they'll break that level, So you sell, you dump your shares, and then you buy them back because now you're chasing. Now you're chasing up here, right? That's how they make their money. They make their money off of the spread, okay, of the stock. That's how they make their money. So grabbed it right in this area, and then I just paid myself up, held through this pullback, paid all the way up, and then as soon as it started dumping out here, I gave it to the VWAP, and then I got out the rest. I was only holding about like maybe five contracts right at the end. So I went in with nice size on it and then just paid myself out. So you pay yourself on pushes. Don't pay yourself on dumps. Don't take emotional sells or covers or even buys or shorts. Don't do any of that based off of emotion, guys, okay? You're just going to chew away your profits, and it's not proper trading practice. So this was a really nice trade. What else we got here? So Nvidia was really, really nice. Another one. You see the level it's hitting? Right at 186.39. Another one. Do you see how it reacts with these levels, guys? It does it every day. Okay. Now I know a lot of you, like I mentioned previously, you're well aware about support and resistance and how important it is. But it's how you trade it. Okay. It's how you trade it. So this is a lot of the stuff that I teach at TrickTrades, and you could have grabbed Nvidia here, right? So what did it do? It started showing signs of basing right at that level. Okay. So trading can be easy. Now, I'm not saying that trading's easy because it's not. There's a lot of moving parts and a lot of moving pieces, okay? But it can be easy, okay? It's about what you make it. If you make something difficult or you make something complicated, you've got a bunch of indicators on your charts, you have some cockamamie strategy, it's going to be difficult. You're going to struggle, and you're going to struggle for a really long time. Okay? There's no need to struggle. Trading is what you make of it. Okay? Now, quit fucking around. Simplify things. Trade off of basic support and resistance. And if you listened to what I was saying and stop listening to the nonsense that's out there with either people that are just bitter and jealous or just they're hacks. They're complete hacks. If you listen to that, that's what you're going to be. You're going to become that. Don't. Check this stuff out, guys. Go back, okay, like I told my mentoring members for a homework assignment for this weekend. Go back on the daily chart. Go back 15 years, 10 years, 15 years. And you'll see how these levels react. High of day and low of day. Okay? That's it. That's it. That's all. So I hope you guys enjoy this. I hope you guys learn something. Make sure to smash that like button and subscribe, please. Okay? And come check out TrickTrades.com, guys. You won't be disappointed. I put my heart and fucking soul into this, and I want nothing more than to teach you guys how to do this and get the chains, take those chains off from your 9 to 5. I've had the 9 to 5. I used to bust my ass as a contract welder. Okay? So right now, instead of being at home in Costa Rica, staring at the ocean right behind here and hanging out with my family, working, I would probably be in northern Alberta right now, somewhere freezing my balls off in some wet ditch, welding up some 12-inch yellow jacket pipe. That's what I'd be doing. But because I stuck with it, even though it is hard, and it's one of the hardest things you'll ever have to do because it's all up here. So let me help with this. Let me get this rewiring straight for you, okay? Now, I know this exit went on long enough, and I'm not trying to take up too much of your time, but I hope you guys listened and make decisions for yourself, okay? And we'll catch you on the next one, folks. Adios.